Hey guys, it's Market with May. It is May 25th, and we just have about 3 more days before we end the quarter and we all go off on Memorial holiday and deal with summer volatility. It is such a strange market today. I'm going to share my screen and start getting into it. 1 second. But as per always, we always say past performance is not indicative of future returns. And wow, what an intriguing world to trade in. I would say if you look at we got 3 people here. Okay, so if you look at the indices, what you'll see is that there is kind of a mix. They've been dancing around more or less where they started. Now they're up a bit. That is because we do have a fair amount of macro data that's about to come out at 2 o'clock. And if we look at FinViz, which I love to look at just to show how things are going, you've got half in green, half in red. This isn't really indicative of any kind of meaningful direction, especially given that you had such a sell-off yesterday and really in the last couple of weeks. I do want to mention that so we're going to go through economic data. I'm just going to show you this one thing. And then it's really fascinating because I think that what you really have to do in this market, if you're more of a long-term investor, is that you are going to just have to find your spots and come in and then cost average downwards because the volatility should continue through the summer. I really want to show you this. I don't know how my screen got so incredibly small, but it did. It is what it is sometimes. If you look at this, we have FOMC today at 2 o'clock. That's kind of driving a pause. But I actually think a lot of people aren't thinking about this GDP number. And the more I listen to these calls, the more my suspicion is either this month you'll already start to see it, but sometime in the summer you're going to see exactly what it's going to be a lot less ambiguous what it is that our Fed chairman is saying when he says that the market and the economy is incredibly strong. I'm going to go through that in just a little bit. This week, we still have Autodesk reporting tomorrow, and then a couple of other names. Ulta will report as well. I don't know that Ulta drives the market so much, but it probably will do just fine. All of the stores are based in the US, and you still have women doing a number of things due to Zoom and the new kind of world that we have. Plus, you've got summer coming. So, but Ulta trades so strangely these days. Originally, it was much easier to call, but I think in this market environment, it's a little bit tougher. Plus, the liquidity isn't always there for Ulta. This is really what I want to talk about. I've got, I'm just shy of 340. I'll probably close out my 400 sometime either this week or early next week. And I'm still seeing about 58% of the names do fantastic, great, and I'll, most of what's doing really well. Hi, Todd. Most of what's doing quite well is the names that are very much so oriented towards the areas that are getting beat up the most. So semiconductors are doing fantastically. You've got areas within healthcare that I think people oversold in COVID. It's not every single area, but Pfizer, as I've been very bullish on, it's more or less trading flat. Even it's held above 50, even though I wish I would have gotten a lot more of it. And that really is because it does appear that you are even though the market will sell things unambiguously across the board, it can only do so much in the names where the shareholdership is already transferred to folks that just feel like those names are massively undervalued. Now, I still think that these bear markets are really tough to trade. I'm not going to lie, but you do just have a bunch of names that are experiencing teens year-over-year growth, bringing every single dollar down to the bottom line. And if anything, are expanding operating margins, even to the extent that they're not trying to fleece the consumer. And, I think in that regard, those names are just they're not moving. Their upside volatility is just so much stronger than their downside volatility. For lack of a better way to say it, they go up more than they go down. I think that's why even in all of this, you're just not getting energy doing anything but either trading flat to slightly down on days when the market just opens up and brings it in, and then on the days when it goes up, it's like a spring loaded in one direction. And so many of these names do actually have dividend yield. Devon, which we've been very bullish on, has a 7% yield-ish. Pfizer has a 3 and change yield. And I just always tell people some of the best personal account over the past 2 decades, names that I have ever purchased have been pharma companies with significant pipelines that were trading at very low valuations, in this case, single-digit valuations for Pfizer, which is why I'm so bullish. Now, some people ask me like, oh, isn't the greater reward in Moderna? Because boy, Moderna's cheap as well and has a lot of the similar dynamics. Look, I am a fan of Moderna, and when it gets really clobbered, I was bummed. I really wanted to buy some yesterday, and I did not. And Moderna, I think, is recovering slightly. But yeah, I am a fan of Moderna as well. It does have a number of drugs in phase 3. But phase 3 is still phase 3, right? Pfizer actually has drugs that are selling at a very good pace, and it also has phase 3, and it also has a dividend. So in moving into the summer, I would rather have Pfizer over Moderna, but that doesn't mean that you won't see me potentially buying Moderna if this market in its volatility decides to spit out Moderna as well. But yeah, and then there's a few others, but I think that they're not necessarily behaving in a way that makes me so excited to talk about them today. I will probably talk about them more in the coming weeks. With respect to semiconductors, there's a number of names. I'm going to try to put together a list because not all of the semis are doing as well as the other semis. We do have NVIDIA reporting this evening. They will probably do just fine, but the market loves to spit out high multiple names. And even though in fairness, this is trading at 1x PE to growth, it is trading at 1x sales growth, depending on what metric you prefer to use with NVIDIA. The fact is, because that growth rate is so crazy, it's really, in this type of market, where they're not giving kind of any kind of discount, or I'm sorry, they're not giving any kind of room for someone to be only slightly off, so to speak. And also they're not giving any room for the future prospects. You got to be just careful going in. So I am not touching this as it relates to earnings season. Once the report comes out, we shall see how to think about NVIDIA. If you already own this at this point, there's not a great way to hedge it given where vol's sitting at. So that's something. Just definitely give me a one-off if that's really something that you care a lot about, and we can talk about that. What I would mention, though, that was probably the most constructive, because some of this is review, the real new thing that I saw as I was listening to calls the last couple of days, most of the companies have been very unhelpful, to be fair. Usually they give you great macro, because at the end of the day, if you're operating a company, then your macro to me is going to be better than any street analyst that could ever even pretend like they know what's going on relative to you, who has to run the company. And if you make the wrong decision, you are going to have a lot of people without jobs and all these other things that are rather important to livelihoods of people. But especially when you listen to like literally all of them, usually their macro picture is going to be stronger. What I can say is that nearly every company into the quarter, if they even thought there was a reason to do it, they went ahead and brought guidance in. And in some cases, you were like, you just beat the street estimate. Why are you bringing guidance in? What's wrong with you? You know what I mean? And I get it. It's the right thing to do, and it really does set you up for a better back half of the year. So that is actually something to take note of. It's not that these companies are concerned necessarily. Some of them took guidance in because they just want to see a little bit more clarity on supply chain coming up in the Asian region. Some of it is because they legitimately had to take estimates in because they have, some low single digits percentage of their revenue coming from Ukraine, Russia. And so that exposure was just prudent to do so. But almost everybody appears to be in line with this idea that GDP is not growing in the US, or that there's a potential weakness in GDP growth, and that we're going to just raise interest rates into it. You can't know these things, but this slide from Silicone Valley Bank, which is one of my absolute favorite banks when they report, I don't always go long this thing, but I do love what the sheer raw effort that they put into talking about their business and about their macro. And this was one of the slides that I thought was really important for people to understand. This is their total average client funds. And Silicon Valley Bank, given where they're located, just does a fantastic job letting you understand the non-public portion of investment. not a better way to say it. Their companies, you can see what's going on in Angel, what's going on in Series A, B, C, all the way through to whether or not we're going to have some kind of meaningful IPO market. And they're really just good. I mean, I just have to give them a lot of credit for just being good. This is one of many slides that were in their deck. One of the things they talked about was that although they're, first of all, they are still seeing average growth in funding, and also to the extent that it's not the last part of their funding, which is to come public, because that is really the exit for a lot of different investors. That's the exit for a lot of different management teams, even in some regards. But the later stage funding rounds, it's very clear that the funding has just moved to earlier stage in a lot of cases. And they're seeing that clear as day. And then there's just some folks that have cash on balance sheet, just hanging out on the sidelines. And we would have thought that we would have seen some slowdown Q1 to Q2, and really, nope. I mean, you don't have a multiple on it, but they're more than compensating in fees for what they would normally have expected to get from like just something going IPO, and then they own the warrants, and then everybody's super happy, right? So this is a really, they had reported last month, so I'm a bit delayed. Apologies to the world on that, but it does, nothing has really changed. And as I listen to more and more companies, this dynamic is persistent in the sense that, right now, everyone wants to short the markets. Everyone wants to say, oh, we don't want to be in equities. We don't want to be in anything. And that is because you've got this massive market uncertainty. And even me, you'll hear me, you got to hedge, right? You can't just be kind of like out there in the markets. But I will say that for the back half of the year, if you continue to be massively bearish and literally any of these things hits, you might find yourself in a unexciting spot, for lack of a better way to say it, because there is a lot of money on the sidelines. The US economy has 100% held up. And I really want to mention this on my rating system, the things, this 85 here, and even some of this 45, okay? The 85, for me, you had top line growth still. It might have just been single digit growth, but in fairness, we're in Q2. We're reporting Q1, which means like you're at the end of the year, you've got this great growth. And then people kind of are like, hey, what do we do in the first quarter? Okay, so this is companies that still had like single digit growth, but they just weren't able to bring it to the bottom line. So that was like flat, maybe slightly down, the operating margin compression. That's what these companies are. These 45 where I'm like, these were bad. Most of the badness was that you had top line growth, okay? You didn't have to, because if you had a lack of revenue and also margin compression, that's my puke out, okay? But these are folks that had top line growth, but just couldn't manage supply chain, but they had top line growth. So that's why I'm saying that you got to be really careful if you're being too short going into the GDP estimates tomorrow. And then really, I think GDP is going to be something that is going to become, usually it's not the most important metric because there are other things that matter, but because of where the US sits, and because one possibility that allows us to navigate through this insanity that we've got in the world right now of like crazy geopolitics, and every prudent manager of a business being like, let's just go more conservative these days. But one possibility that is very real is that the US GDP allows the rest of the world to come out of this. And so month by month, we're going to have to just watch this number and who's doing well. It wouldn't be just the US, though. It would also be Latin America, which is, I think, going to be potentially, their politics has always been bad, but they might actually get out of this like rock stars because things have just calmed down for them over the course of the last few years. With China, you still have, the election has happened, but you still have kind of the confirmation. And so the powers that be sometimes suggest that you will see kind of this weirdness that we see currently in the China markets through the November time period, and then alleviation at that point. So those are kind of some temporal things to consider. Does it mean you have to buy the market right now? Not necessarily, but it does suggest that when things get really beaten up over the course of the next 3 months, go ahead and start to nibble and then wait for the data points and be a bit more prepared as we move into the middle and back part of summer. Because, you know, sell-offs at these levels where a lot of things, especially in large cap, are trading, it's a little bit much, for lack of a better way to say it. And with that, I'll open up for questions. Any questions?
Hey, me, it's David.
Hey, David.
Pfizer,
Yeah.
For lack of a better explanation, that the general investor population think that Pfizer's not good because COVID is over with. But can you elaborate a little bit on just how not? Yeah, okay, go ahead.
So a lot of the COVID, so not every company is impacted by the decline of COVID cases, or however you want to think about it, in the same way. So for example, the lab companies, Quest Diagnostics and LabCorp, they are eating it right now, for lack of a better way, because the margins on that business were wonderful. And the ramp up of other testing is just not happening quite the same way, because you still have hospitals kind of working through, and the medical community still working through some of these other procedures that would require testing. So for those folks, painful, right? Okay. But for specifically Pfizer, even more so than Moderna, right? But Pfizer has first of all, as relates to COVID, they have an agreement with the US government where any additional this came out in the last quarter, not this immediate quarter, but the contract is good for at least a year. Okay. But any COVID vaccine that is not sold, the US government will buy. And I think it's because we're probably going to redistribute it to other countries via our foreign aid aspects. But I mean, it's unclear to me, because I know where the limitations of what I know is. I'll just say it that way. But it sounded like that's kind of what the deal was as relates to what then would be the use case of that COVID vaccine. But if you think about it, that means that they can manage the cost and margin of that vaccine pretty well. And you're seeing that, period. You know what I'm saying? They still have, so COVID is about, I want to say it's about half, it's a little bit more, a little bit less of their revenues. So I get it, okay? But it's still ongoing. And quite frankly, there's still other countries that want to buy any vaccine that we don't want to that we don't want to take. So they still are getting growth in that drug. And that's part of the reason why on any given moment, like if we're going in the next quarter, it would be a little bit harder. They do have a massive pipeline. And as a result of how much cash they took in, they bought pipeline. So they actually have a lot of drugs in phase 3. In contrast, other companies might only have 1 or 2 drugs in phase 3. The profitability of any one of those moving from phase 3 to actually distribution, it could be really, really fantastic. Currently, they have as much cash on balance sheet as they do debt. I mean, it changes from day to day, because like, I think on the day that they marked the quarter, it was like more or less even Steven. So it kind of depends, but they just have a ton of cash. And this isn't a company that has like this isn't a company that isn't like that has any kind of debt considerations or concern. So they're just jamming it, even after they jammed as much as they did into M&A and into R&D. What you're left with is like the total, like all of their debt. If they needed to pay off all their debt tomorrow, they could just move the cash into, you know what I mean? It's like a joke. So that's why in a market that's uncertain, Pfizer, because you can absolutely still get the growth. And if you're worried, you still have the dividend yield to sit there and protect you in this market, because it is a 3% dividend yield. You know what I'm saying?
Right. Plus you can sell calls above it and double the dividend.
Yeah, there is actually enough vol in this where you could sell calls. I just be careful, because I do think it's severely undervalued given where it's at.
Well, yeah. Longer dated, way higher.
Yeah, strangely enough, you might even be able to buy puts, because the vol on this is trading very strangely. I'm not gonna lie. There's been a couple of days where the vol is so cheap on the puts. I'm just like, fine. You know what I mean? And I think that's partially because it's a low dollar value stock. And
so if you're saying buy the stock, you could buy the puts to protect yourself. I think
you just have to watch it and see, because the vol is shifting so fast name by name. I have to look for today just to be sure. But like at 53, you know, this market is so weird. I was trying to, quite frankly, I'll just tell you, I was trying to get it under 50, anywhere under 50. The market is really volatile. If you were to buy it here, you're probably fine, but you might absorb like 1 or 2 points of volatility. If you're buying the stock, that's not a big deal. If you're buying the options, just be a little bit more careful, because vol will spike as you buy those calls in a very funky way. So it might be a little dicey to, like, I would rather people do this via the stock market and lay off the options. If this drops back down to the 50 level, then definitely do it via the options market, because you'll get the leverage from that.
Cool. Okay. Geopolitical, well, not geo, but the Democrats are up for re-election. I mean, a recession talk would kill them.
Yeah.
You see what I mean?
Yeah.
So,
but Jerome Powell, for what it's worth, he's not gonna like, he's shown a great deal of integrity in the sense that he won't, he's got to do what he's got to do as Fed chair, but he does. So the major statistic that he's looking for is how is labor going? Because he's got to maintain the unemployment at a level that doesn't just create runaway. Okay, so like if we look at the inflation components, he can't affect food. He cannot do anything about energy. He can't do anything about the semiconductors either. And I mean, we know that we have fabs coming on with some benefit of some potentiality to create production in the fourth quarter. Really, some people say in the third quarter, because at least in the third quarter, you'll be able to specify the fabs that you're, so like a company like Intel that's building all those fabs, they will start to see some revenue from the, kind of the pre stuff that happens in the third quarter. But really, we're talking about, earliest fourth quarter to get more semi production in the US. And then really it's next year. But so between now and the end of the year, he can't do anything as far as that goes. And with China locked down, they're also not going to help us out on that, because they've got their own semi issues right now too. So, you know what I mean? So
can his rhetoric be, hey, we're doing, inflation probably is coming down and we've got a thriving economy, right?
His biggest thing is he's just got to watch the labor numbers. Okay. So and there's still, and it's interesting because most people were still a little bit not excited about their ability to find staff. It was ever so slightly better than last quarter, if I was to say, with Walmart actually massively overhiring in the fourth quarter, terrible as it is. So they had to actually lay off some people, which is insane in some ways. But they're literally the only one. Do you know what I mean? Like, no one else has been like, oh, so easy to find people. No one. I don't know how they messed that up, but that's part of what why I think with their operating margins being a little bit weaker, it was actually the roll off of some of that. Versus Target, which didn't have that issue. Yeah, he can't. So the only thing he can possibly do is try to decrease the demand for labor to try to help with inflation, which I don't even like. That sucks. He knows it sucks. He's not interested, given all the stuff external I don't think he's not a jerk. I don't know another way to say it. He's a pretty smart guy for whatever people want to criticize him on. Any other questions?
Nope, not for me. Thank you.
I know we got the FOMC, so we'll find out today, and I will absolutely be listening to that, because sometimes it's what is said afterwards to clarify the meeting minutes that people miss.
Yeah, I mean, you've been bullish oil for a long time. Natural gas is over $9 today. So I mean, do you foresee? I mean, and summer's coming up, which is the driving season. So maybe September. I don't know. I mean, it just keeps going up and up.
Yeah, I mean, the only thing this actually is horrible, but this is part of the reason why Console, ticker CEIX, even though I know it doesn't have the best liquidity in the options market in general, it doesn't have the best liquidity, but that's one of my favorites. In a lot of ways, you've seen Peabody recover as well. And at these levels, I can appreciate why some folks might be really bullish Peabody as well. There's nothing really wrong with them. They just kind of messed up the last quarter a little bit on a couple of different things on their operating margins. Like, they should have just done significantly better. Arch as well as both thermological coal and met coal. But my point is this: one way One way that the United States specifically could manage through this energy situation is if the utility companies switch their mix up to be more coal oriented. I mean, I'm not a fan of that, just for the record, but I am a fan of like not having runaway inflation. That would increase the amount of nat gas that could be redeployed in other areas, because that's really what energy is. It's just a mix of the only area that you might be able to find a little bit of management if you were like, I'm the president and I've got like nerds working for me and I need to come up with some way. That would be the one way. The fact is, though, there's not a lot of extra coal. Consol Energy's management team talked about the fact that, they have way more demand than they have supply right now. And any coal that they can dig up if they get lucky and they dig up more, they would just release it onto the spot market immediately, because all the utilities companies are happy to buy it like that if you magically come up with some coal. But that if production on coal gets a little bit better than expected, first of all, the coal companies would still do fine. If anything, they do great. That might help us out on that gas. That's like the only thing I can think of.
Cool. Thank you.
Anything else? All right, guys. See you tomorrow. Good luck on the FOMC. Hopefully everything goes well. Bye.